So it looks like it's time to get started. Hello everybody, and welcome to our webinar, Key Insights and Strategies for the Lending Industry Moving into 2025, organized by Has Fintech and TPI Software, our partner. I'm Daria Nihaychik, a digital transformation consultant at Has Fintech, and together with me is Harun Anwar, who is head of global sales at TPI Software. Now, to get started, we need to discuss some definitions. Of course, lending is about a lot of things and has a lot of different aspects, such as, for example, finding the right niche or being compliant with the local regulations or devising strategies to turn your borrowers into repeat customers. And the list can go on, basically. But today, during the course of 1 hour, we cannot possibly cover all the aspects of lending. That's why we are preparing a series of webinars where we'll be inviting interesting experts from all walks of lending and fintech life. So stay tuned. And today, we'll focus specifically on the role of API management for the companies, for the lending companies to stay scalable, to stay secure, and also to be successful. Everybody knows that today, virtually any human action in the lending cycle, be it origination or servicing or even collections, can be replaced by an automated function or service. And companies are, again, lending companies are repurposing their budgets so that it's more about the IT budgets to invest in technology and invest in the scalability and speed up the time of decisioning and serve their customers better, instead of paying for sick leaves, vacations, and sometimes employees spilling coffee on the papers. But on the other hand, with an array of services available today, it's really, really very important to keep the software infrastructure consistent, to keep it elegant and, again, secure. And here is how API management comes into play. And that's why specifically we have invited Harun today to discuss API management, because Harun is one of the world's leading experts in API management and digital financial services. So Harun has been working in international banking, finance, and digital transformation space for the last 25 years. Specifically, he's worked with the Big Four consulting companies and international banks in ASEAN, West Asia, and the Americas. So Harun, we welcome you today, and how are you?
I'm good, Daria. Thank you so much, and what a generous introduction. It has been a great joy to get to know you and your team, and I'm really excited to share whatever little I know with our audience, and happy to take the questions.
Sure. Yes. And by the way, dear audience, you were shared a link to web forms, Google Forms. So feel free to post questions, and our lovely moderators, Annie and Paulina, will make sure that your questions are addressed. Okay, let's get started. So Harun, with digital lending growing worldwide, how do you see API management could help lenders scale their operations and stay competitive in such a fast-changing market?
It's very good. What we do see in the last few years, especially it was accelerated during the COVID duration when people were not physically able to interact as much as they normally would, that there is a rising demand among the banks and customers to be able to handle all the borrowing, lending transactions digitally. And to make it happen, there's this concept which I will explain a bit more for those who are not familiar with technology, called API, Application Programming Interface. And APIs, from a simple technology perspective, are able to connect points to points and carry the data within that. So I can make a request from one end to the other end, to a server or wherever the data resides, and say, hey, look, I'm looking at this kind of data. Can you send me this information? And then that information comes to me in a secure manner. So principally, it's as simple as this. but there are multiple ways to do this and multiple forms to do this. And what lenders are looking at now is building a massive ecosystem of that allows people to be able to originate loans, send in application requests. These application requests are then checked for approval by logging into credit bureaus, by logging into other areas to verify and validate if the borrower is indeed the borrower they claim. I can send and upload my documents, and then those documents can be again validated and authenticated from various third-party sources. So all of this is now possible and feasible thanks to this API technology that allows us to be able to connect different sources in a way that things can happen in literally microseconds. So,
Mm-hmm.
so I'm trying to get a sense of how people who are listening to us understand that what is so different about the way we were able to borrow and lend money in the last few years to what we are saying now is going to change going forward. And what's going to change going forward is our ability to manage massive amounts of data using API-based technology.
Absolutely. But moving on to any new technology like API management in this case is also connected with some challenges, maybe. So maybe you could, from your perspective, you could name some of the biggest challenges that lenders face when implementing API management.
Okay, it's again a very good question, and having worked with different lenders, both in the organization as well as uh, helping them as a consultant to implement. And what I find is the biggest challenge is the mindset. So the organization, when they go from a traditional way of lending to a more data-driven, innovative, technology-driven lending, there is a massive gap on the understanding. And these traditional way of operating often hinders the implementation of new technology, new way of thinking, new way of designing. And we see everyone in the organization, whoever is playing their part, has to come and be synchronized. For example, in the past, if people said, okay, we manage things in a certain way, and now we are going to let technology be the driver, it doesn't mean that we have to drop all the controls, all the security, all the way of authentication that we had, which we really firmly believed were the way to do things. What
Mm-hmm.
technology does, it just makes it simpler, more accurate, because technology tends to make less mistakes than humans do. Makes it
Absolutely.
faster, okay? So we can process much larger volume in a much more limited time. And all of this that we are able to achieve with technology helps us handle a large volume of data, applications, volumes, turnaround time, hyper-personalization of the people applying. So for you and I, technology is going to help us move forward so much more quickly than in the time before, earlier, we were not able to do. And
Absolutely.
when I today find it, let's say, uh, I'll give you an example. And we hear these buzzwords and terminologies a lot, but there is still a limitation of how the traditional banks are struggling to adopt to the new way of thinking and new way of doing things. So number one, key takeaway, it's not always about technology.
Oh, yeah.
Technology is a key enabler, but the people are the ones that make the huge difference. And we need to make sure that the people are mentally able to understand and implement those things. Number two, the processes. By taking traditional processes and not designing them for the way technology can enable new processes, and we let the programmers change those processes in a way that cannot, but actually just taking bad practices into making them automated, that doesn't help either. So what we really need to do is make sure the people, the processes, the products that we are putting into the new technology are able to take complete advantage and full advantage of new technology. And that's a key gap I see. The challenges, you asked me, what are the challenges, right? So that's a huge challenge I see, where technology is capable of so much more, but some of the people will dumb down the technology to make it fit into their old model.
Yeah, this totally resonates with me because we at Has FinTech, we often have a lot of requests for modernizing of the lending infrastructure and lending software. And still at many organizations, there are still stakeholders who are trying to keep the old ways going. And sometimes the bigger the company, the richer the facade, then the more old school things are going on behind the facade.
Correct.
So yeah, it's
But there's a
this
way to solve the problem, Daria. And this is what I want to highlight. It's not a hopeless situation. Yes, we cannot make everyone an expert overnight, but to make sure, so for example, let's say if an organization is using their legacy systems, right? And legacy systems were not designed to adapt to the modern microservices architecture or were not designed to be API ready. There are ways, for example, we could do API wrapping, okay? And that API wrapping allows, as a way of API within an API, to have an old person, the old legacy system, talk to the new way of doing things. So it kind of acts as an interpreter of the two systems. The other part I would recommend is gradual phasing of how we move from the old way of doing things to the new way of doing things. There's often this desire to go from a traditional way to the new way almost immediately, and it
oh,
gives
for
the
sure.
entire system a shock.
Yeah.
And I've seen this because the reason is human beings are creatures of habit. So now imagine if you have 1,000 people in your organization and they have all evolved learning to do things in a certain way, in a traditional way. And even though we are moving them from left to right, we have to take those steps, baby steps, gradually get them there. It's what we call incremental modernization, okay? Which
Yeah.
means we take the things and break down, take the old legacy components, and then we transition them to API compatible microservices and focus on high impact areas first, and then go into low impact areas. The technology is there, it's just how we approach it. Okay? The other thing I would like to highlight, and this is key, is data security and privacy. Okay.
Mhm.
And the media talks a lot about hacking and cyber attacks. And yes, they're there. But you know where the biggest weakness is inside the organization. Inside the organization, I come across many more flaws than the external threats because we give authorization and power to a lot of people who have keys to the technology systems,
Mhm.
and they're able to access data, change, manipulate, move it around. And that to me is a bigger threat, which often gets overlooked, does not get publicized a lot because it points inwards, right? But we really, really need to make sure as we transition and transform from the old legacy systems into new microservices architecture-driven API-based systems, is we ensure that the right people can control and access the data.
So it looks like it's the main strategy to ensure the data security in today's world. Are there any others that you would recommend, or do you see here fit?
It's a good point. So I would break down all these components, okay, and strip out data as a separate component now going forward. A lot
Mm-hmm.
of times data is embedded in legacy systems. It was never, the monolithic systems never envisaged that data would be separate from the application. But as we move forward, the housing of data into data lakes or much more accessible way for multiple users by different applications has become key. So designing a data architecture is going to be a key way moving forward, uh, which to me is a key aspect of design. Having a full enterprise-wide architecture and a blueprint is also key. So we don't end up in an organization buying different systems. Again, talking about lending, I have seen people buy CRMs independently of loan origination systems, and they buy other client lifecycle management systems, and there's no cohesive think through across the enterprise, and it's just picking different systems and trying to patch them together.
Yeah, I call such architectures a quilt blanket. And sometimes we have also faced such challenges where the clients are inclined, they're in love with some particular component that they want to buy from ABC company, then XYZ, and then this, it is doable, but the question if it is optimal.
That's right. That is absolutely right. And finally, I would add one more thing is good governance. Okay, just like any other thing. This is one way to say, oh, okay, I know how to write an API. And a lot of programmers tell me, oh, I know how to write API. But then after that, you see a whole set of APIs written which are not on the same principle. There is what I would call a clutter of APIs, poorly written APIs, redundant APIs. So making sure that we do proper API cataloging, proper access control, role-based access control, attribute-based access control, all of this falls into governance. So version control and to control this kind of proliferation of APIs in an enterprise, which goes unchecked.
Yeah, for sure. Well, thank you very much. Let's move on. So let's look at a couple of examples of how API management can be applied. Take, for example, open finance. So how do you think that its rise will influence the lending industry?
Daria, that is very near and dear to me about what's happening in the industry, what are the drivers, and at the heart of it, again, I will assume that some of our listeners or viewers may not have uh, this terminology, open finance. So I'm going to step back and give the context a bit. So one of the key drivers that started with the EU's Payment Services Directive 2, PSD2, and then later on GDPR, was to give the control of our data meaning consumers or users' data, into their hands. And the intention is to say, who owns data? Who owns data about Harun? Who owns data? So that became the central theme of this discussion. And I know many people get irritated when websites are constantly asking them to consent to the cookies and the data and all of that. And it's like, no, I don't care. But data has now become critical. And who knows how much information about us has become a central theme of open finance and open banking. So now what it does, it opens up the space. It opens up the space for us individuals to determine and choose what kind of an experience do we want. So do we want to borrow by going via Facebook? And the eventual lender might be a different bank. So we have these third-party providers who are able to consolidate a lot of data. And I'm just giving this as an example because Facebook is known to people. I'm not necessarily saying that they have a model like this or advocating a model like this. But what I'm saying is that there are billions of people, way more than a bank would ever have or a lender would ever have, who on a daily basis interact and interface with their platform of choice. And when they go on social media and their platform of choice, they interact. They either do shopping. We know there's a lot of social media shopping that goes on nowadays. There are marketplaces that have been created. So all those transactions at the end of the day have to be facilitated with some kind of a payment. And
Yeah.
that payment, without having to leave the ecosystem, has also an element of someone saying, hey, I like this person's risk. I like this individual's risk. I will give them instant credit to be able to purchase or acquire their product or service. without having to go and apply for a separate loan, get that loan approved. So we call it embedded finance or lending. So open finance is basically creating that ecosystem of architecture that enables different players in the ecosystem, from buyers to sellers and the transaction makers. And in that process, we can access borrowing. Borrowing means ability to have money. And that is what created this whole buy now, pay later, which became a big theme. So now the regulators, and you can see that in the EU, which is at the forefront, UK, the United States, Canada, Australia, and more so now also in this part of the world where Dubai, and there's a very active discussion on how to enable open finance and what is the rule book around that.
Absolutely. And then again, with the proper API management, the company, the lending company, could manage collecting all the data. Of course,
That's right.
subject to expectations and everything.
That's right.
And
So
access on the spot without creating those multiple tedious integrations.
absolutely right, Darius. So again, just drawing a parallel on how API is the key in succeeding here is API will make it easier to have an architecture where people are able to send data by connecting two endpoints. What does API do? API actually carries the data between 2 points. And there are multiple formats of APIs available depending on the requirements. There are ways to encrypt the data. There is a way to secure the data that goes from point A to point B. And then we also have ways to ensure that the data API request for data is coming from the right authentic source. Because, of course, when you have sensitive data exchanged between point A and point B, there is a possibility that someone might want to hack into that data and access it. So there's a whole technology around how we create and enable this environment where data can be exchanged and shared in a very secure manner. It is stored in a secure manner. So we can see evolution of digital vaults where you have secure data. But I think there's also an importance of educating the individual consumers. Businesses tend to have a better understanding of data. They look at agreements much more carefully, whereas the individuals, I find, tend to overlook that. And there must be given the level of awareness, because consent is the central part to this, right? So the consent in the GDPR, and which leads to PSD2 and open banking and open finance, consent of the consumer is key before the data is exchanged or shared. But what if the people are not familiar of what they're giving consent to? If they're not aware of what the implications are of what they're giving to consent for, that to me becomes a key part that goes hand in hand with technology for enabling open finance using APIs.
But ultimately, the power would be in the hands of power to convince to click that button, I give consent, is pretty strong in the hands of open banking, open finance providers, because at the end of the day, there is a huge incentive, and like data is collected about everything nowadays. And
right.
this cross-selling has penetrated lending industry as well very deeply. Previously, a couple of years ago, maybe even a couple of decades ago, we could receive a call from a competitor telecom company trying to win us as a customer. Today, the notification, a text message like, "Hey, you are eligible for a loan." And this is enticing, because still a lot of we speak about millions of people around the world and companies who take loans, and they're used to taking loans, and then it's all about getting the best conditions. So here, whoever has more access to data, to more accurate data, and whoever can process that data, the faster, more efficiently, as using AI again, has a higher chance of winning higher audiences among their customers.
Absolutely right. I completely agree. And I was about to say when you were sharing that with us, that look, even today, I am appalled on the number of banks who will ask for information for lending or anything else. Why should I restrict to banks? I'm talking about all alternative lenders, banks, specialized lenders on uh, on media which is not secure. So they will request for information via email, like Gmail, Outlook. They will share information on WhatsApp and
Upload to
request.
SharePoint.
Yeah. I mean, I'm just literally appalled that what's going on. And as an individual, let's say if I need a loan or I need a credit facility, maybe I'm naive. I don't know. But it's the responsibility of the lender to at least make sure that they acquire all this data in a secure manner. And what I can tell you that the regulators are going to come down very, very hard on those practices because data security, data privacy is becoming a central theme. We constantly see regulators highlighting this, and the onus and responsibility lies primarily with the lenders here.
Yeah, I totally agree. And actually, we have a pretty timely question from the audience room.
Okay.
So when we speak about modernization again, you mentioned security, of course, and security is key here. But what are the other best practices for, or generally maybe, what are the best practices for lending institutions looking to modernize their infrastructure without disrupting their existing operations? So there's a new facet to it, in addition to like not doing it in bulk, as you already mentioned, the security aspect. Maybe there is something you could add there as well.
This is actually a very good question from the audience. And so when we go from a legacy system to a modern architecture, which is, let's say, API-driven microservices architecture, my recommendation always is to first map out the operating model. Operating model is map out what we are doing today and how it works, and then map out what we would like the future state would look like and what we really need to get to. Then, as we transition from the existing operating model or operating state to the new target operating model or target state, we break it down into incremental phases because we do not wish to disrupt any of our existing processes, and we need to be able to clearly identify the interlinkages of different processes. And as we go from an old operating model to a new target operating model. So the aspect is understand very carefully and then make incremental changes. And that's why the adoption of agile way of doing things is key to transformation and how we manage things. Agility is not only about technology and creating squads and things like that. Agility is about understanding how we respond to the rapidly changing market environment, how do we respond to the rapidly evolving regulatory environment, and how do we make sure that all our processes which were built around a monolithic legacy system are well understood, and how do we first decompose or break them down and understand them and then recompose them into the new environment, which is designed for a more agile, responsive way of delivering things in the digital space, which again, coming back to open banking and open finance, is designed to be all inclusive. It has the ability to interact and exchange data not only within the organization, but externally with the organization as well. What do you think? I mean, I know HES FinTech has been involved in this. What are your thoughts, Daria? What has your experience been?
Well, from what we see, what works best when it comes to transforming the lending processes with the company or inside the company. First of all, I totally support you there that being agile is key here. I would like to add here that it's important as the lenders break down their roadmap into increments. Of course, with prioritizing, right? So that the first priority items are somewhere around client retention and portfolio growth. Still, it's important to be able to run, well, first of all, set up some focus groups, both among customers and among employees of the company, and try the new ways and try the old ways and compare them, and maybe try variations of new ways, because you can plan everything ahead, but then again, you never know how the clients may respond. And this is a highly competitive market globally already. So doing some A/B testing with the various focus groups will give the latest insights into the client behavior, into what the response even from the employees, because again, technology mustn't come as a shock. On the other hand, their operations should be automated kind of as much as possible, still keeping the level of a human touch with the client at those in those lending spheres where it is required, like for example high net worth individual lending to high net worth individuals, or even business lending has a bit more kind of hand holding rather than microfinance, where all the processes can be automated 100%. But the main idea here is to take those steps and look at them and test them and validate them and react accordingly on the spot. And understanding that most lending companies are not fintech companies, so most of them are buying the software, although there are some big fintech lenders as well. So it's important when finding a provider to make sure that this provider can respond, can react, and is pretty trained and experienced in the agile methodologies. Otherwise, there is a risk to blow the budget and come up with a product which will be either outdated or irrelevant for the customers, for the audience. So this is what we advocate at HasFintech, definitely. And then there are some technicalities like blue-green methodology in deployments, so that when those new chunks are implemented, the work of both of the customers and of the employees is not disrupted, so it all is elegantly upgraded piece by piece, and everybody is still doing their daily routine. So I guess this would summarize it.
Yes, you touched upon some valid points and extremely useful points for people to keep in mind, because as you said, this A/B testing and green-blue methodology, they are key, because we may believe that certain things will be better when we move in that direction, but only when we test it with the people who are actually using it or who are our customers do we really know if we have picked the right path to move forward. And having the ability and agility to be able to adapt and respond is critical. So that again underpins this very important point on how we plan for the change management. And in the change management, it's not only customers, it's our employees as well, who have to be comfortable enough with the changes that we are implementing into the new direction. It's very good points.
For sure. Now, Harun, let's discuss AI. Everybody discusses AI. Why should we leave out that subject? So, can you share any connections between AI and API management? Is there any like AI already implemented within API management?
Okay, that's again a very, very good question. And I'm not sure this question's coming from the audience or is it your question, but I can tell you something.
Curiosity, because AI is everywhere. So I think you should unveil some of the mysteries of the presence of AI related to API management as well.
Okay, so AI for sure has played a significant role in how we approach traditional way of doing things. So in API management, artificial intelligence comes at multiple levels. Okay, so let me start with one or two first, and then we go. So we have seen how generative AI enables us to write things better, create things better. APIs are no different. So if an organization is using APIs, it's like a programming code. It's already there. And by creating AI, it can actually write better APIs, help the programmers write better APIs, write consistent APIs, standardized APIs. So it takes away the human element of making mistakes when generating key parts. And the
Yeah.
governance of APIs becomes much more efficient when we add the AI as a layer to it. AI is basically looking at those patterns, looking at those performances, looking at what works well, what doesn't work well, and making sure that they provide the right output. So that's key. But that's internal to the API management. The other thing what AI does very well, it looks at patterns. So when we have data exchange, it looks at peak loads. It can predict when we can expect certain amount of volume coming in. It can also look at anomalies. When the cyber attack is about to happen, it can detect those anomalies much better, and AI can help prevent those things. It can help us do load balancing. It can help us with caching. Caching of data is when we have a lot of frequently accessed data. To cut down the time, AI can track and cache that data for us. Uh, so all those kind of things, directing of traffic to different servers. Uh, so artificial intelligence really goes hand in hand in designing of an API management platform as well. But when we look at AI and API together for external applications, that also becomes a huge advantage of how we can now do business dealing with clients. So for example, your predictive analytics uh, is all AI driven. Personalization, as we said. So when I go in an open banking platform for borrowing, how well do they understand me? So I'll give you one small example, and I'm sure everyone has experienced it. There are seasons when people tend to overspend, Christmas being one of them. Okay? We all have to buy gifts for the families. We all tend to overspend it, and then it is a known fact that when we get our first bill in January or Feb, it hits us as a shock, right? It's like, oh my God, I had a great time, but now, similarly for vacations in summer or anything. Now, with AI, we can write credit programs that match my cash flows, looking at my bank account, and make sure my installments are aligned to my cash flows. In the past, we
Mm-hmm.
just divided. We simply said, okay, this is your equal monthly installment. Okay, we don't care because we don't know. You owe us this much, and we're going to divide it up into this percentage. That that did not require any artificial intelligence. But now, with account aggregation, looking at all my accounts, my cash flows, my salaries, my bonus period, maybe I'm not a salaried employee, maybe I get commissions, I get paid. But AI can now very quickly analyze and then say, okay, Rune, you want a 36-month loan? And this is how we propose. They can give me choices, one or two choices on how I want it. So I'm saying the possibilities exist. It is just that we have to allow AI to come into those possibilities when giving options, when approving loans, and for the individuals who are used to the old way of doing things to feel comfortable and adopting those new way of doing things.
Oh, yeah. And then I can go even further by even promoting loans ahead of time before the high seasons. And in fact,
That's right.
many of our customers, I'd say like a lot of our customers are experiencing high loads on the lending software, loan origination part during those Christmas periods. So it's wise to take the step forward and just propose the loans ahead of time to
That's
those
right.
who are on a shopping spree.
And this is a very good point. So historically, again, the way credit cards would work or loans would work, it would be pre-approve someone and give them the extra spending power. But now with the rise of BNPL, and again, we will debate it in a separate session on how BNPL was actually implemented. But the concept is really beautiful because it embeds the finance into my purchase journey. And
Absolutely.
this is the kind of stuff we need innovation and Of course, API and AI both enable that kind of innovation.
Yeah, and also we experience there is a high demand for buy now, pay later, specifically from the Middle East and Asia right now. So we as a customer, as a company, lending software company, are experiencing this increased demand, which is cool that businesses are flourishing. Okay, Harun, we have another question from the audience, from our viewers. It's about the key drivers. So what do you think will be the key drivers of digital transformation in lending over the next few years? So what will be influencing the further evolution or revolution of lending?
Okay, so very good. And I think there are multiple themes that we see which will play a key role in how lending also evolves. So I think one of the key ones, which I am a big believer in, is sustainable finance. I think green finance or sustainable finance, it is now a key driver from an individual and corporate perspective, and how that gets shaped up and what kind of data is integrated to make sure that the lending that's happening in that space is genuine green finance lending. I think the other big theme that we will see is ethical lending. Now, ethical lending is a very broad topic. We can call parts of it Islamic finance as well. But the trigger behind ethical lending came when a lot of people complained that they took loans under BNPL, which they did not deem to be loans, and in the end could not pay them back. So I'm putting ethical lending as a big theme that's going to evolve going forward on how, and then you can have multiple personas in it, whether it's green finance, or is it Sharia compliant Islamic finance, or is it some other, but the concept is people will see lending in a much more different way and categorize the loans in that bucket. The part about financial inclusion, I think, is going to become a big theme, and we will see a lot of groups which were disadvantaged in the past and were not able to get access to credit will be now, through again technology, have access to that credit which they were denied. So what I do foresee is, let's say I'm a villager, I'm a farmer, and in the past the big banks would not look at me as a potential customer. But now with all this open banking, open finance availability, my ability to access credit or finance either through traditional lenders or through alternate lenders will become a key factor that I see. So these are some of the things I see happening on the lending side. Of course, on technology side, I'll re-emphasize, we will see cloud becoming more pervasive. We will see API technology and AI technology becoming more pervasive, and security and fraud protection will be key themes into the technology space as well. Does that address your question? Because it had two themes to it, and I gave you both functional as well as technological behind that.
Well, I think it does. I think it does. With regards to financial inclusion, this is also what we at HAS are looking forward to. However, unfortunately, today, many of because we're working with startups as well, lending startups, who have very beautiful projects around the globe, targeted to to financial, social as well, social and financial inclusion. And those projects, they are just axed by the investors. So maybe the mentality of those, having those portfolios, like ultimate financiers, is not yet ready for it, because in lending, well, it's obvious, of course, the lender looks, or the financier of the lending business looks at the figures, looks at the immediate forecasts, but still a lot of A lot is being done also by non-profit organizations. Like, for example, one of our partners, Axiom, is working a lot in Africa and other developing countries in other regions to promote financial inclusion, and works with local banks, for example, to help them transform so that they can also accommodate those farmers and those who were essentially underbanked. And also, from what I notice, again, based on the requests that we receive from customers all over the world, is that we see that technology is coming in those kinds of asynchronous waves. So something that is requested by a company, by a lender in the UK or US today, is something that will be requested by somebody from Southeast Asia, maybe in half a year, or maybe in a year, or maybe in 2 years. Just to give an example, historically, well, at least based on my observations, business lending was more prone to human interaction rather than personal finance, because personal lending can be automated much easier. But nowadays there are requests, again, involving AI, possibility to process very large volumes of data, big numbers of documents, even with like free text, like what's your business plan, write an essay about your future farm or whatnot, to process all that data, to understand it in order to potentially automate the risk analysis and the final lending decision. So this is what's coming from like the more technologically advanced companies in technologically advanced countries. I mean, at the same time, unfortunately, many of the countries still do not have open banking. And so what we have to face with is, again, all those old-fashioned OCRs and trying to read poorly pictured, photoed bank statements and so on. However, again, the good news is that there is always somebody who's setting an example. And I think like everybody in the sphere is just looking at those examples, and those are set to direct the other regions as well. It's unlikely that in some particular region the technology will go in a completely different way, just because we're all globalized nowadays. So wishing the technology to advance everywhere and the jurisdictions to embrace that technology, because again, there are sometimes issues whether it's possible or not to store client data in the cloud, even if it's a regional cloud, and the other aspects of lending and what's approved, what's not approved. So sometimes the technology goes ahead using those gray areas in the legislation, and the legislation has to keep up, as you also mentioned, by protecting the consumers, protecting the borrowers. Sometimes it's vice versa. Some countries are so much regulated already that it's really hard to. Sometimes it's also caused by, as they are called, the big boys. So in many countries there are like big boys playing, and so it's harder for smaller lenders also to stick their head out. But it's driving there, and it'll get there.
Daria, I think you summed it up really nicely. It is a constantly evolving landscape, okay? And this landscape is sometimes moving faster in the emerging markets because they're not as mature, and the quote unquote big boys are not that many trying to dominate their position. Regulatory environment is also more agile and adaptable in that space, even though they are watching what more mature markets are doing before they adopt those new ways of doing things. And at the same time, the environment is opening up. So I do a lot of work in supply chain finance as well. And in the supply chain finance space, the whole evolution of API ecosystems enabling data exchange and data interchange has become a key factor. Okay, and we see this is going to actually at some stage evolve or merge into open finance, which will enable your traditional big boy lenders taking care of tier one customers, then you will, I mean, this is just my ability to foresee what trend might look like. And maybe B lenders at a higher price lending to tier B borrowers because they are to be able to match and support each other. And we may also have a lot of peer-to-peer lending coming in.
Oh yeah, for
Where
sure.
yeah, so they may come in and they may play also. So now you have a full spectrum in that open finance architecture space where you have on one side, you have a spectrum of borrowers and they are classified by their ability, credit rating, etc. And then you have on the other side, different kind of lenders who are willing to divide and come and take the risks. And then some smart person from the capital markets will come in and try and securitize all of it together.
Yeah, of course, because where there's demand, there's always supply, and the people are imaginative. So when a lot of people, a lot of companies need some extra cash right now, so there are ways to, divide. There are a lot of ways how money can be lent to them, and this people are still being creating those various opportunities. Harun, we have another question from the audience. Let me
Okay.
read it. So
How
how
are
do
we
you
doing on time? I'm so sorry. I've lost
10
track of
minutes,
time.
9 minutes left,
Okay,
9 minutes
good.
before the end of the hour. So
Okay. Yes, please.
let me read it for you. Uh, sorry. How do you see the difference between developing countries like Vietnam versus more mature banking markets and the trends with digital and AI transformation? Can they leapfrog to become more mature? So I think
It's
it already supports a little bit of what you were saying, but maybe you could dwell a bit more on it.
it's again a very good question, and having the good fortune of having worked in mature markets as well as emerging markets, and until very recently some frontier markets. I think the opportunity for emerging markets to leapfrog is way higher because they're not encumbered by all the traditional way of doing things. But having said that, there are challenges uh, on the governance side.
Yeah.
So there are three elements. When it comes to real implementation, there are three elements I would recommend. One is the regulations. So the central bank or a ministry, they come up with regulations and say, this is the law, you must implement this law. That's the regulation. Okay, but those are just the rules set for people to play. But how do people actually in the real world go ahead and use those rules to play the game is very different. And that's where the whole governance and maturity of the market comes into play. So if the enforcement of those regulations and the discipline of making sure that it's being done properly, that has to be a key part as well. Without that, you can have the opportunity to be leapfrog for an emerging market in that space. But at the same time, it can become wild, wild west, where despite the regulations, the enforcement is not strong enough to make sure that people are behaving properly. So EU, for one example, when they enforce something, they will enforce it even on one of the big players in the market, right? EU can come down very hard for any regulation because they have the power and the wherewithal to implement and enforce that. So that's where you see mature markets behaving differently than some of the more nascent markets. Does that answer the question correctly, or do you want me to expand? Because I think the opportunity is there. Technology is available to everyone. It's the same technology, whether you implement it in the UK or you implement it in EU or you implement it in ASEAN market. So technology is there. It's how we implement the technology and how do we operate it in that environment makes all the difference.
Yeah, and I think that in countries like Vietnam, governments are both cautious and also they have an opportunity to be creative, to do this leapfrog step. If I remember correctly, a couple of years ago, there was a very strict revamping of certain lenders in Vietnam who were not playing by the rules. So Vietnam is taking care of its borrowers,
Yes,
of
yeah,
their
yeah, of course, of course. So
borrowers.
that's what I'm trying to say,
Yeah.
that the government The government is doing its best to enforce those regulations. But the challenge is that the players are not mature enough to take care of that.
Right,
In
right.
certain markets, the players themselves are mature enough to not, but it's a question of market maturity. But the regulations are there. The government is ensuring that they enforce it and they fine the players who are not doing it.
Yeah. Okay. So I think, Harun, we could slowly wrap up with our webinar, because we have covered, I think, everything that we were planning to cover. Actually, I have one last question to you. Again, getting back to API management. As much as you have already shared with us about the API management and its role in lending, do you see any particular trends related to API management for 2025?
What I do see for API management, we are talking about API management only, is that you will see a higher importance on financial grade APIs. So far, we have not categorized APIs in terms of the quality of API, the security, encryption. There are standards out there, but as what I have seen recently with certain markets like Singapore, where they've published an API playbook and how to use that, the whole environment of creating a regulatory sandbox, the whole environment of making sure that we create, there's going to be a lot more emphasis on quality of APIs going forward. And it will be done because it is becoming the main source of exchanging data, and there is sensitive data involved in it. So do we want to make sure that the quality of exchange of the data that it carries is of high grade, financial grade?
Okay. Well, thank you very much, Harun, for sharing your expertise with us today. And I'd like to send a big wave of thanks to all our viewers, and especially to those who asked questions. So there will be a recording of this webinar available, so stay tuned to our socials. And again, look forward to meeting you all and discussing further interesting topics related to lending in our subsequent webinars. Thank you very much.
Thank you, everyone. Yes,
yeah.
Please continue, Daria.
No, I was just wishing a great day and a great evening to everybody, depending on what time zone they're in.
Certainly. And Daria, just for everyone who attended, we will start publishing the series going forward, so people can choose and pick the sessions they would like to join and attend. I think this kickoff session was a mix of both technology as well as functional areas. But as we move forward into the series, we'll be able to streamline technology focused conversations and webinars distinctly different from the functional ones.
Okay, great, awesome. All right.
Thank you.
Good evening, day to everybody. Bye-bye.
Thank you. Bye-bye.
See you. Bye-bye.
Bye.